Everybody, welcome to Cowboys Metals live stream. This is Rob Keens, your host. Welcome everybody to the program. We will give it a few minutes for everyone to get in here and let YouTube notify everybody and join us in the live stream. As mentioned, I'm pretty pissed off on this one, so you guys are going to see me in a rare state as we get into this Cowboys Metals live stream. I'm going to give it a few minutes. I'm getting error messages on the screen at YouTube, although I can see myself in the, here we go. We got it. All right, ready. Everybody join in. We are live, Cowboys Metals live stream. Broadcasting from the great state of Texas. I'm going to go over silver today. I'm going to talk about manipulation, and more importantly, we're going to talk about why the silver miners should skip the COMEX and sell directly to the buyers. We'll get into that here in just a moment as we wait for people to load. I noticed on entry into the live stream, we had a bit of an issue. I think it's a YouTube issue. So we're going to let people reload back into the stream, and we will get back into it here in just a moment, guys. Hey, everybody, for joining. Fat Vegan is here. Neil Hahn is here. John S is here. An Exile is here. Chris Jones is here. No Cowboys hat today, although I can go get it if you want me to. Here, let me go grab that real quick. Give me just a minute. All right, let's see. There's a request for the cowboy hat, so we'll just put that on, guys. Third World Trillionaire is here. Thank you so much for joining the program. Thank you, everybody, for loading in the conference and joining us on Cowboys Metal live stream. Neil Hahn says he had that issue too, so I guess I'm not the only one that had the issue with the live stream. So, Bakersfield, California, Super Seamster Sewing Show. Welcome from Bakersfield, California. I had an uncle that lived in Bakersfield. He was a firefighter, and I remember going out there once when I was a kid, when I was 12 years old, and two of my cousins snuck me in to see Revenge of the Nerds, which is a PG-13 movie back then, and that was a lot of fun. Can you imagine 12 years old and seeing Revenge of the Nerds? What an education that was. That was a lot of fun. So I have fond memories of Bakersfield, California. So welcome, Super Seamster Sewing Show, to the program. Welcome everybody to the program. Happy to have you guys joining. I'm giving it just a minute to let everybody reload. There was an issue on the original loading of the stream, so don't worry, we'll get there in a minute. All right, looks like I have sound. I just checked it on the control panel. Everybody loading in. Welcome everybody. Remember, we have super chats open if you want to grab my attention, and you can do a super chat or ask questions in the regular chat, and I'll answer them as best I can. We will have a Q&A on this one. Today's topic is silver miners should skip COMEX and sell it directly to the buyers. I think that we should, and I got pretty pissed off today. I'm not a happy camper today, and I'm going to explain why. Because on Friday, for those that support us on Patreon, I was documenting a breakout in silver. I'm going to document that same breakout in silver to you guys here on the YouTube live stream today. And then I'm going to show you where these assholes went and dumped a bunch of paper, and they exposed themselves, because I'm going to throw out some additional technical indicators you usually don't talk about. And I'm going to show where they effed up, because now we can see the footsteps. We can see what they're doing, and they're doing it when they don't necessarily need to do it. They're jumping the gun. I think they're getting a little bit nervous about what's happening in the precious metals markets. All right, got a little bit of sparkly water here. Don't worry, guys, I'm not drinking on the program. I'm completely sober for this one. Julie Newhouse is here. Hello, Gold Silver Pros. Hello, Julie Newhouse. How are you? Welcome to the live stream. All right, we're going to go ahead and get it started. I realize we're a few minutes past, but we had a technical issue, so I wanted everybody to reload. Thank you, everybody, for joining Cowboys Metal live stream. This is Rob Keens, your host, goldsilverpros.com. This is where we broadcast from the great state of Texas and take no bullshit. And today I'm taking no bullshit from the assholes that run the COMEX derivative markets and the banks that trade them. I'm going to go on a rampage, guys. I'm tired of it. I'm done. It's over. And we're going to expose these assholes for who they are. So if you're ready, let's get started with the share screen. I'm going to hit you up first with the chart. This is the silver chart, ladies and gentlemen. That, though, a lot of you have followed my channel have seen me put up many times, and I'm going to talk about the breakout that I talked about, and then I'm going to show where they smashed it down. And yes, I'm going to give you the volume for today, Monday, 11/22/2021, and show you where they screwed up. So this is the normal chart you see right in this area. This big box in the middle is a silver chart. And what I documented for my supporters on Patreon on Friday was this little breakout. And it's a breakout for a couple of reasons. One, it went above the 2450 mark and stayed there for a week and a half. That's what you call a breakout on the chart. 2450 is a critical support and resistance line dating back to 2009 to 2011 bull market in silver. And we had higher highs and higher lows, and we stayed firmly above that little breakout line for a week and a half. So I called the breakout. Well, wouldn't you know, it came back down this Monday, the first business day of trading after I documented the breakout, and retested that 2450 to the downside. What are we trading at right now with silver? We're trading at 2418. So it's down through the 2450 support line down to 2418, and it's testing this little support line dating back to about October when we hit that low of about 2150. Okay. What they didn't want to happen is, you can clearly see on the chart, if you see this red indicator here, this is the 200-day moving average. This little red squiggly line, okay, as of last week, it had almost eclipsed that red 200-day moving average. That's not what they wanted to happen, because it would signal a breakout. Why? You basically, when you do moving averages, the standard, and you can do whatever moving average you want, whatever technical indicator you want, but the majority of people on the market are going to look at the 50 and the 200-day moving average, okay? So the 200-day being the most important of the two, because it's 200 days of rolling average in a price. When you break out through the 200-day moving average, I mean, that's over a half a year of data. That's a pretty significant breakout. So as the silver price bumped up right against this red squiggly line here, they had to smash it down, and smash it down they did. And I'm going to show you the settlement data, because I've got the settlement data. Oh, ladies and gentlemen, yes, I do, for today. And I'm going to show you the settlement data and how they hammered it down. I'm going to show you exactly how they did it. But they hammered it down. Not only they hammer it down, they hammer it back down through the support line. They're trying to make a convincing hammer down. They know people are looking at this 2450 support line because it dates back 10 years of trading. They know, ladies and gentlemen. I think they're going to try to smash it down through this green rising low line and get it back down closer to the 50-day moving average, which is this blue line. See, blue 50-day moving average. They want to smash it down to the 50-day moving average. They want people to think that nobody gives a crap about silver. And when I say they, I'm going to show you who they is. We don't have the cotton data yet, commitment of traders. That won't come out till next week, of course. They do that on purpose. But I'm going to tell you who it is, because it's the same damn suspects that always do it. So this is that. Well, we've got additional technical indicators that you normally don't put on there. I put the RSI, which is a relative strength index, and I put the MACD, which shows the strength of a move. The relative strength indicator, it's kind of like, in a way, standard deviations in statistics, or it's a range. And generally between 30 and 70, you call that a healthy range, right? Anything above 70, it gets shaded one color and they say it's overbought. Below the 30, they say it's oversold. Okay, it gets shaded in this brown. Okay, overbought, oversold. What does that mean? Is it possible to buy too much or too little of something? Not in the physical markets. The physical markets is real demand. But in the paper markets, they have these overbought and oversold indicators, which is to tell the market, or I think condition the market, that, hey, you've gone too long or too short. Now, short-term trading, sure. Long-term, I don't think so. But anyway, I put this up here just for educational purposes. So when we saw the last major silver smash down to about 11 bucks in 2020, right before the quote unquote pandemic drove silver to 30, you saw this big smash down here. If you look at the RSI chart, the relative strength indicator, it was oversold, meaning that was a buy signal to people that silver should rise, and rise it did until it was overbought in this little green. Okay, it got above 70 on the RSI, that's overbought, and it got smashed down from 29 bucks. Now it has stayed within that range, except for this little mini breakout in February, silver squeeze. This is silver squeeze right here. This is silver squeeze, where it went from about 25 bucks to about 29.50, almost 30. Rostam Benham came on public TV or public YouTube, the Boca V conference, and I've documented this in public, and said the CFTC got involved in tamping that down on purpose using their price controls, their various price controls. He admitted it. He is the CFTC commissioner at the time, and he admitted it. He admitted it, ladies and gentlemen. They admitted to smashing it down there. It wasn't even overbought at, overbought at that point. It had reached 70. It was on the border. So they smashed it down, admitted to smashing it down. I'm going to show you something. This, I believe, when it's overbought, traders will dump a little bit in the market. Okay, that I can understand. When it's oversold, I can see people going long. It was not overbought or oversold, despite what people said during the silver squeeze. People were buying physical, not necessarily the contracts. The contracts were rising because of the physical demand, but the contracts were not overbought, and they smashed it down anyway. You're going to see the same thing as of today. Look at this smash down right here. It had just approached, it hadn't even touched on 70. It was not officially into overbought territory, technically speaking, and yet they smashed the hell out of it. The last 2 times it's gotten anywhere near, the last 3 times it's gotten anywhere near this overbought indicator. Before it actually went into overbought, they smashed it. They're giving themselves away. Every time you see a major smash down and it's not technically an overbought territory, it means it's not the general traders in the market. The general traders in the market pay attention to these indicators, the MACD, the RSI, the 200-day and the 50-day moving average, as I'm showing you. If it's not overbought, there's no reason for a big smackdown unless the powers that be that are controlling the market don't want it to get to a certain price point. They don't want it to get to a certain price point. Okay. Second indicator, MACD. This shows you the strength of the move. The strength of this silver move from here to here was right here. Okay. It's not that big on a 12, a 26, and a 9 period averages. That's what the MACD is we're using the 12, 26, and 9. Overall, it's pretty muted. Look at what happened last year after the pandemic. Okay. It went from really low on the MACD, relatively low strength, to very high strength, and then it made sense to come back down. It stayed within this really tight range on the MACD, meaning the strength of all of these moves is not very strong. So it's not like there was a huge amount of technical buying, and this is the key, listen to what I'm about to say. There was not a large amount of technical buying that drove silver up to its recent $25 recent high here last few days ago, last week. Last week, it got driven to 25, and it wasn't even that strong of a move, according to the MACD, relatively speaking. It was nowhere near silver squeeze here, and it was nowhere near the result of the pandemic of last year. Okay? It was relatively muted on the strength of the move, which means that the general market traders, the millions of people in the market worldwide in silver that come to trade on the COMEX, did not smash this down. It was not overbought on the RSI. The strength of the move was weak overall. It was a general melt up in silver, a very slow one. There's no reason technically for that smash down to come. Okay, I'm exposing the assholes that are doing this. There was no reason for that smash down to come from a technical perspective. Period. End of fucking story. There was no reason other than the fact the powers that be didn't want it to cross the 200-day moving average as a bullish signal, so they smashed the effing hell out of it. Okay, and they're exposing themselves because we haven't had an overbought situation dating back to the middle of 2020, and yet we keep getting smash downs as we approach 29, 28, and now 25. Every time it gets above the 200-day or anywhere near one of these longer term support lines at 24.50, 27, or 30, they smash it down when there's no indication that the traders on the market technically would have agreed with that, because it's not popping above and staying above 70 on the RSI, and we're not having these big heavy volume moves. MACD is a measure of the volume or the strength of the change. RSI is relative strength according to previous trading data. Okay, there's nothing to indicate technically that we needed a smash down, and yet it got smashed down. How do we know? Because we're looking at settlement data. Because guess what, ladies and gentlemen, even though they're not going to put out the volume data till tomorrow, here's volume. That's as of Friday. Okay, relatively standard volume. I guarantee you, when we get today's volume data tomorrow, you're going to have a high bar like you had on 10th of November. A high bar. They've dumped paper, but we do, ladies and gentlemen, have the volume totals. And the volume, literally from the time I started looking at this about 1 hour ago to now, has moved up from 93,000 to 101,000 contracts. It's moved up 8,000 contracts as that volume data is tabulated at the end of the day. And this is for Monday, 22nd of November. You can see right here. Look right here. 101,000 volume contract. And where did they smash it? 76,000 volume of those went on the December contract. And the next big largest contract in March, 21,000. Look at the prices. 24.29, 24.36. Okay, they're smashing it down via the paper interest. Why? Because it was approaching the 200-day moving average. That's why they're doing it. Okay, that's why they're doing it. 100,000 contracts, 76,000 in December, 21,000 in March, and about 1,400 in May. They smashed it down below 24.50. Why? 24.50 was approaching that 200-day moving average, actually seeing about 25 bucks. And it got above there. It was at 25 bucks. They didn't want it. They smashed it down. No reason technically up here on the RSI or the MACD for that to happen. No reason technically in the longer term chart for that to happen. The range is up to 29.50. Okay, you can't really call a long-term bull market in silver until it popped above 29.50, 30 bucks. It's down here on a relatively weak move. And 101,000 contracts came in and smashed it. 76,000 December, 21,000 March. There's no reason for the broad market to have done that. It had to be the bullion banks. Why? We know from looking at the COT report, the commitment to trader data from the CFTC, the regulator, every single week for about a year and a half, 2 years, I've been looking at it. It's always the bullion banks, which are massively short. We also know from looking at the data that it's 4 traders and 8 traders, which make up the largest portion of the shorts in silver. It's been that way for, God, at least 10 years of the data I've been looking at. The only people who drop this much short paper in any one given time is the bullion banks. I've never seen it done by the managed money. They're usually long most of the time. I've never seen it done by the producers dump that much in one day. It's the bullion banks. So we're going to come back and look at the COT data next week. And I can almost guarantee you it was the bullion banks dropping 101,000 contracts because they didn't like the fact it was hitting its 200-day moving average, and they don't want a bull market in silver. If first of all, it stayed above this trend line 24.50, which is what I called a bull market, they knew that. And so they decided, you know what? We don't want to hit that 200-day moving average of 25.37. So we're going to smash it down. There you go. That's proof right there. And I'm going to show you in a minute why I know it's manipulated. So people think manipulation is a conspiracy theory. Well, mon frere, I beg to differ. It is not a conspiracy theory. It 100% is not a conspiracy theory. All right. I'm checking on the stream. It's going pretty well, guys, right now. We have a lot of viewers in, 150 people in right now. We haven't gotten to the subject, which is silver miners should skip COMEX sell directly to buyers, because I wanted to talk about why they should do that because of this effing price manipulation. But I got to finish the price manipulation argument first before we talk about why they should. Okay. Thank you, everybody, for joining in on the program. I appreciate you joining in for this live stream. It's going to be our last live stream before Thanksgiving, and I appreciate you guys coming into the program. All right. Now I'm going to show you why that we're having these smash downs. Before I do, Dumb Money Media has come in with a very nice donation. Thank you. It says, I'm getting a bunch of Twitch streamers soon to interview. I'm going to shill silver in your channel. They do different stuff like politics, gaming. 067 on Twitch will be one of the first. Thank you so much, Dumb Money Media. I appreciate it. I appreciate us getting out to all generations and all people. We're used to just talking with like-minded people. We need to talk with everybody. We need to spread this word far and wide. And we appreciate you, Dumb Money Media, for doing that and using the channels that you have and the friendships that you have, the association that you have doing that. Okay. Everybody needs to know this story. Everybody, if we're going to have honest markets again, everybody needs to know the story. All right. Back to the content. So why should the miners sell directly? Well, let's get into that, shall we? How do we know they're manipulating? Well, guess what, ladies and gentlemen? We have not one, but 2 more settlements to end price fixing. One is Barclays Bank PLC, Scotiabank, Societe Generale, and London Gold agreed to pay $50 million to end claims that they illegally fixed prices on the gold market. This is on law360.com. You can see the URL right here. And guess what? According to Reuters, November 19th, I think this was Friday, JP Morgan to pay $60 million to settle precious metal spoofing lawsuit. JP Morgan agreed to pay $60 million to settle a class action litigation by investors who accused the largest bank of intentionally manipulating prices of precious metals, futures, and options. And of course, this is behind a paywall. You have reached your article limit. Reuters and Bloomberg are both doing this. Now you got to pay them to get the news that JP Morgan's manipulating the market. Now, I'm saying they're manipulating the market. There's nothing in this press release that says they were. It just says they were accused. But if they're settling a lawsuit and paying $60 million, guess what? They're probably guilty. Because if you're not guilty, it costs a lot less than $60 million for their lawyers to basically play this out. Barclays and others, Barclays, Scotiabank, Societe Generale, and London Gold Market, okay, paying $50 million. JP Morgan pays $60 million. Okay, this is a continuation of suits. This came out November 13th, but this part was a continuation of suits dating back to 2015. 2014, actually, 2014, 2015. There was a bunch of suits that came out. And Deutsche Bank, I think, paid $60 million, if I remember. We'll get into that in a moment. 2 new articles on spoofing and price fixing in the gold market and the precious metals markets. 2 within the last week. So you tell me, smashing the price down below the 200-day moving average, 101,000 contracts in one day, and you have this bloodbath in silver right there. Was it Barclays this time? Was it JP Morgan this time? It's the bullion banks. They're the only ones that are having these multi-million-dollar settlements. Multi-million-dollar settlements. They're the ones that are doing it. I mean, connect the dots. It's in the mainstream financial press. I'm not making this up. It's not me just looking at a chart and then going to look at a commitment traders report, putting 2 to 2 together, which I can do. It's basic math. It comes out in the financial media and in the law media. They're manipulating the markets. They're liars. See, this is why the silver producers need to go sell directly in market so you can get physical price discovery, because you're not going to get it with these assholes sitting on top and dumping paper and getting slap on the wrist fines and never going to jail. Well, guess what? Here's an old one. This is back in December 9, 2016. Remember how I said this went back to 2014, 2015 timeframe? Well, Deutsche Bank back in 2016 paid $60 million for the price fixing. Same website, Law 360. So this one is related to that one of 5 years ago. Do you sense a pattern? These are all the bullion banks trading on the COMEX. HSBC back December 8, 2020. Gold price fixing class action for $42 million. HSBC bank investors and trader asked a New York federal judge Monday to preliminary approve $42 million deal to settle class action claims. Why are they paying tens of millions of dollars to settle claims if they ain't busy? If they ain't guilty, I'm sorry. They are busy. They're busy shorting the market. They're busy manipulating that market. That's what's going on. That's why you see this garbage happen over and over. There's nothing technically in these indicators or in this chart, in this range. It was not bumping a range other than the 200-day moving average. It was not oversold. There was not a strong move by the traders. It wasn't a bunch of traders that came in and dumped this. There's a few entities. That's why it shows up like this in the MACD. And that's why it shows up like this in the settlements. That's why it has to be a few traders, the bullion banks. Why? Because they left a breadcrumb trail 10 fucking miles long and hundreds of millions of dollars in depth. Barclays, Scotiabank, London Gold Market Fixing, JP Morgan, Deutsche Bank, HSBC. There you go. That's your primary suspects. It's in the mainstream financial media. So now the question is, so we all be going to First Majestic to buy their silver? Here's their store. Spot 24.18 right now. You can buy silver ingots and bars if you wish. Look at all that pretty silver you can get. This is for the retail trade. So we know some people have some retail. I think you can get it from Sunshine Mint too. There's a couple of places you can get it from that mint it and sell it directly to you. But this is the retail trade, guys. I'm talking about the big dogs. I'm talking about if you're Apple, why don't you go buy it straight from the miners? Okay, and make your deal and allow the miners to sell at enough profit, you're going to have it. Here's why Apple wants to do it. Apple, you could say that Apple and Samsung and all these other guys want the price of silver to be manipulated. So they can get it cheaper and they can build all their products like these iPhones, electric vehicles, medical implements, all that good stuff. Sure. Yeah, no problem. I got you. But in the long term, that's not a smart argument. Because if the miners aren't going to pull it out of the ground at those manipulated prices and they're going to stop and they're not going to develop new exploration projects, which they're not doing, which I've documented on this channel about 100 times in the last few weeks. If not enough money is going to exploration, they're not developing new mines because the price is not enticing them to do it. What happens in the long term to Apple, GM, all the medical manufacturers, Tesla, the military, everybody that needs silver? You're not going to have it. You're not going to have it. So it behooves both the miners and the manufacturers that need it to start doing deals now. And I bet you right now that stuff's going on. I bet they're seeing the garbage going on in the market, and some of these smarter, bigger manufacturers and even the governments are making these side deals with some of these miners. Why wouldn't you? Wouldn't it be nice to be able to go buy that physical directly to them? Maybe they charge you a little bit of premium, but they do it so they can keep their mines running and they can keep additional exploration projects. I'm telling you right now, we've already hit the silver cliff. There's not enough silver in this world. We're starting to suck down COMEX inventories. And I can tell you, it's one financial scare away from silver being unobtainable. I'm not joking here. The amount of silver investment that went into SLV was 110 million ounces in 3 days during silver squeeze. And that wasn't even a scare. It was a silver squeeze. It was coordinated movement. It wasn't during a market scare. Think about a market scare, and there's only 96 million ounces of silver on that COMEX. That's less than what in 3 days they drilled on silver squeeze that they took off, supposedly in SLV during silver squeeze. That wasn't even during market panic. It was just coordinated action by some retail guys that said, let's go get silver. That's nothing. You have one market panic and we're bankrupt in the world of above ground silver stocks at current prices. And I guarantee you, people like me aren't letting go our silver at 24, 50, 25, 28 bucks. I might not let it go at 100 because we're smart, and I guarantee the bullion banks aren't going to do it either. We are about to reach a crisis in the silver market, and it's not going to take that long. And the only way for people to get their products like this is going to be for these companies to go to the silver miners, pay them a premium, and say, I will pay enough for you to scout out your next mine so that I can secure the next 10 years of the silver I need for this product, or I know I'm screwed and I can't make iPhones, I can't make electric vehicles, I can't make solar panels, I can't make medical implements. We don't have dentist equipment. We don't have tools needed for surgery. We don't have Tomahawk missiles because guess what? They use silver. We can't launch a satellite because guess what? They use silver. Everything uses silver. It's getting to the point where you either make your deal and you pay a premium, or you're not going to have silver 5 to 10 years from now. And that price is going to skyrocket so high. And the people, the producers, or I'm sorry, the merchants that use that silver that the producers make are going to wish they had made their deal now. I'm talking to you right now. If you're sitting there watching this from Apple, you're sitting there watching this from any product manufacturer that uses silver. If you're sitting here watching this from the US government or any government around the world and you need that silver. If you're sitting in the medical industry and you know you use silver. If you're in the car industry, you know we're going to electric vehicles and you know you're going to need silver. You better damn well start going to those miners and getting it. Because at this price, it's going to be used up. It's not going to be explored enough. You're not going to have it. It's going to be a game of musical chairs where you can't get it and you're fucking screwed. And if you're a retail buyer, guess what? You ain't getting it either. You're fucking screwed. Because of these asshole bullion bank manipulators that keep putting these multi-million-dollar settlements out while they manipulate the market and make billions off of it. And hoarding the silver on these depositories like they are. We know they're hoarding it. You can look at the data. Most of it's sitting ineligible. What is eligible? Private storage. It's not on the market. It's hoarding. Who has the most silver on the market? JP Morgan does, followed by the other bullion banks. They're hoarding it. And guess what? They ain't going to sell it to you until silver shoots up. If you're a manufacturer of products, you better go get it now. If you're a retail buyer, you better buy your silver now. I'm telling you right now. The more they smash it down, the worse this problem gets. It's artificially low prices, which is causing one, people to hoard it, and two, people to buy the crap out of it. But it prevents the explorers and the miners from going and finding enough for the next 2 to 3 to 4 to 5 years. And I'm telling you right now, we're going to all pay the piper, and the stuff is going to hit the fan in the silver market the more they do this. And I already proved to you by looking at the charts. Let's go back to them. I proved to you they did. That is not a normal market smashdown. It's not a normal market smashdown. There was no reason technically for that smashdown to occur. And the volume was light. It had to be a few players. That's what that data tells you. It had to be a few players dumping on the market in one effing day that have already been caught doing it and have already paid hundreds of millions in fines. What the hell else evidence do you need? What else do I have to say? It's blatantly obvious to even a monkey what's going on. And the regulators are captured and they let it happen. If you want your silver, get it now. And I don't give a flying fuck if you're one of these Bitcoiners coming on my channel and saying, oh, silver's not going up. It makes you an idiot because you don't understand markets long term. I'm sorry. It makes you an idiot. This is the most underpriced asset in the world. In the world. Okay, you understand me? And if you want it, you better freaking get it now. Because it's unobtainium here pretty soon. I know I've said this before, but you can see it in the data. Go look at the data. Let me go pull up that data for you. Why don't we just take a look at the NYMEX metal inventories? How about we do that? In fact, I'll show you how I find this. I'm going to teach you guys how to fish. Let's teach you how to fish here for a minute. Here's how you figure out where a market's going, especially the silver market. I'm going to NYMEX and I'm going to look at their silver stocks. And it's going to open this Excel file. Let me get out of here. Let me share the Excel. It'll take me just a minute and get that Excel file open. And because Zoom is goofy, it only lets me share one screen at a time. All right, we're going to blow this up a little bit. So you can see the numbers. Let me blow it up a little bit more. All right. This is silver as of 11/22. The activity date was last Friday, but they're reporting 11/22. Again, a day behind, no big deal. So let me widen out these two columns because I get those little number signs in them when I blow it up. All right, 97 million ounces. It was over 100 for a long time. 97 is what you can get on the open market. That's registered. Guess what's being hoarded by the fucking bullion banks? 255 million. What's that ratio? That's almost a solid 3-to-1. 3-to-1, they're hoarding silver. What's available? Who's got the most? I don't know. This little company called JP fucking Morgan, 153 million ounces. Were they named in one of those suits of manipulation? Who else was named in that suit of manipulation? I don't know. HSBC, they're hoarding 16 million ounces. I don't know. You see a connection here? Do you see a connection? Have I painted you a good enough picture? Do you see what's going on? If you're a silver miner, you should be going out to manufacturers right now and saying, guess what? In the next 3 years, you ain't getting silver. Not at this price. You want it, you better come get it now, Big Daddy, because otherwise you ain't getting it. And that needs to start happening now, or else we're not going to have it for industry. And these asshole banks that are hoarding it aren't going to sell it to you at $50, $100 silver. They're going to wait till it drive that price up. And guess what? They're going to make billions off of it. Billions with a B. And that's after manipulating the market and making billions manipulating it all the way down and all the way back up. They're going to make money every step of the way. And the ineffective regulator is not going to do a damn thing about it. So what do you say? Should the silver miners skip the COMEX and sell directly to buyers and say, screw you, bullion banks, for manipulating this for so long and effing the market for so long, and we can get better prices, we can negotiate on our own? If you're one of the silver companies that comes on my program and you're actually producing, I understand if you're an explorer, you can't sell it yet. Or maybe you can. Maybe you can do a forward streaming deal. But if you're a producer, you may want to start talking to manufacturers. You might be able to start calling your shots here pretty soon. I think it's going to be sooner rather than later. I think inside of 2 years, this whole thing melts the hell down. And you're going to be able to call your shots at pricing. If you're manufacturers, you better be doing this now. If you're an employee of any manufacturer that uses a significant amount of silver, you need to go to your boss tomorrow morning and say, look at this video. We better get our damn silver. And if you're an investor, you better get your silver now. I'm telling you right now. You better get it now. That's what we're talking about. All right. I have been ranting on here for 34 minutes. I think everybody in any apartment on either side of me, it's probably like, who the hell is that guy ranting on YouTube live stream? But sorry, guys. I had to bring you the truth, and I'm tired of it. I'm tired of the garbage. I'm tired of the outright garbage in this market. I'm tired of the investors getting screwed. And I'm tired of the market getting screwed. I'm tired of explorers getting screwed because they're not getting enough money to go find the next silver. That's going to hurt us all. Silver's not just money. It's a commodity use and industrial use. It's going to hurt us all. Shortages are here, and they're coming, and they're real. Okay, can you hear me? The real. Whew. All right. I feel a little bit better now. So it looks like we ran a poll. Would you buy silver directly from miners? 94% said yes. Good going, guys. All right. What questions do we have? My goodness. Do we just go invade the bullion banks? Somebody, not me, says Long John Silver. Not me neither. I didn't say invade them. I think the authorities and the powers that be need to start thinking about, after all of this fine after fine after fine, and those same bullion banks hoarding physical silver on the market, probably at some point the government needs to get involved. And if they don't, you're complicit and you're part of the criminal activity. Did you hear what I just said? CFTC, the people that run the markets of CME Group, you're criminals if you don't stand in. You're criminals. You're complicit. You're enabling them. You're criminals. Batana Ranja says, hey, we need a PG version of this video so I can send it to my mom. Will somebody please do a bleep version of this video and give it to Batana Ranja? Yeah, normally I don't go off and cuss, but I'm really pissed off. Sorry, guys. That's when I put on the hat and we do cowboy medals, when I get good and pissed off. Peter says, I love that you just purchased a 1,000-ounce silver bar, 26K to over 1 million soon. I love it. Well, thank you very much. We did that for the business, for the solvency of the business, and may have been the best thing I ever did. And it's not only for me, it's for my employees. It's for all of us. It's to protect us and what's going on. I'm not seeing a whole lot of other questions. I do see comments. Last Living Old Cowboy says, if it keeps going like this, 200K silver. I'm with you. I am with you right there, my friend. Other questions, hit me in the super chat or hit me up in the chat. I'm looking. Question, says Dumb Money Media. Do you think at some point Canada might try to confiscate Sprott's physical holdings? I'm not big on confiscation, only because I don't think a lot of people hold it, but I'm beginning to think that, yeah, they could go after bullion banks. I don't know if they go after the miners. They could, but after big bullion stores and deposits, they could. For the longest time I said no. But I'm getting to the point with, not in gold for sure. At least I don't think so. In silver, I'm getting to the point where I'm like, maybe they do go after not only savings deposit boxes, private holders, maybe they go after the Brinks and companies like that. I don't know. It's entirely possible. Maybe they go after the mints that have a bunch of it. With how unobtainium silver is going to be, and how ridiculously pricey it's going to get at one point, I could see at that point, yes, them confiscating for national security reasons. They'll do it under national security. They're going to wait, though, until the stuff really hits the fan. Then they're going to confiscate it, maybe, from places that hold concentrated amounts. Will they confiscate it from the people in the U.S.? About 0.5% of all assets owned is in precious metal. Probably not. I think they'll tax the hell out of it. Or they may they'll do two things. One, they'll incentivize you to turn it in for like $100 an ounce, and then it revalues to like 1,000. So they get it cheap. And then after the revalue happens, they're going to tax the hell out of it if you own it. So you're going to have to hide it at that point, I think. They're not telling you to hoard a Bitcoin. What they're doing is telling smart people to keep stacking. That's right. How safe are PMs in a PM IRA? Julie Newhouse, that's a good question. My wife has one of those, by the way. And I don't know the answer to that, because guess what? It's stored somewhere. And in the response to that last question I had, I could see them, if it absolutely goes bonkers, like I think, for national security reasons, to confiscate it. What they'll probably do using eminent domain laws is confiscate it and drop you in a nice little IOU that gives you something else of equal value in that IRA. probably that's what's going to happen. It's going to be company stock or some other relatively worthless thing they're going to put in there. Probably cash, probably fiat money, which then burns up the month after they do it, and hyperinflation. Another contribution from Dumb Money Media. The peeps I'm getting lined up are small, but they have loyal fans. It's going to be interesting to learn about them for more future apes. Thank you, Dumb Money Media. Dumb Money Media is a pretty smart guy. He's building his channel. He's building his subscriber base. Networking through YouTube, doing a great job of it, by the way. So we will always put him on because he does a great job and supports the channel. And we tell you to go to Dumb Money Media's YouTube channel. And I think you have a Twitch too. So go visit Dumb Money Media on Twitch as well. Canadian Limey says bought 5 ounces of silver today. Would be good for you. Peter Frohline has a question. Let me take a drink of my nice sparkly water. I'm trying to get off of diet sodas, guys. I have to have something with some flavor and fizz in it. So I got this 0-calorie bubbly. Diet soda is my last vice. I'm going to get off of it if it kills me. So I'm working on it. All right. Peter Frohline has a question. I believe the only free way forward is 40% gold-backed crypto. Then the Fed does not control and is free and open. What do you think? Yeah, any sort of currency instrument, whether it be a legitimate crypto, not Bitcoin, but a legitimate crypto that's not a big Ponzi, or a cash bill, short-term life, doesn't live forever, i.e. not a Fed bill, controlled by local municipalities that represents gold and allocated storage. Either one of those schemes would work. You could pass free gold and silver freely. Yeah, you definitely could do that. You can pass gold and silver freely, but even back, in the 1900s when gold and silver were still money, they were still using commercial paper written by a bank. It was short term and had a date on it, and you had to redeem it a certain amount of time against an allocated gold store. So that's what they would have to do, or they could do it with the blockchain. But just don't do Bitcoin. Bitcoin is trash. I'm sorry, in my opinion. You want to use a blockchain, I'm fine. Just don't freaking use Bitcoin. Use anything else. But a gold-backed crypto on the blockchain, fully transparent, has nothing to do with Satoshi or the government. I'm okay with that. Aspartame is sweet rat poison. Stay away from it, says Third World Trillionaire. Dude, if you have an article, post that. I know aspartame has been linked to stroke and some other issues, but if you have anything linking it to like an actual poison, please post that or email me that information. Julie Newhouse says, thanks, that was what I thought. Guess better cash out pot or IRA, pay tax and buy physical. That's what I have been telling everybody. Julie, what I did when I left corporate America is I cashed out all my 401k/pensions. And I didn't have a whole lot in there in the first place because after I lost a bunch of money in the 2000 tech crash, I didn't put a lot in there. It was my employers forcing me to in these forced plans where it's like they say you have to put a certain amount in and then you have to do all this paperwork to get it out. So, but it wasn't a big amount, but I got it all out and just paid penalty. And everybody thought I was nuts. But I'm telling you, I don't want that money locked up there. I didn't care what I got out of it. As long as I got any cash out of it, it went into precious metals. 100%, I am with you on that one. Keto diet all day for me, but damn, I need my diet sodas. Haha, Dumb Money Media. I'm in the exact same spot. The only thing that allows me a keto diet is drinking something with flavor. And I was on the diet soda to get away from sugar, but aspartame is worse even, I think, longer term. So I had to get off the diet sodas and go to something. So I'm on this bubbly, sparkly water, which there's nothing in it. There's no artificial flavor. Next thing they'll tell me is the cherry flavor in here causes cancer, which it probably does. Who knows? But I can't just drink regular water all day. It kills me. Best diet soda. I do have stevia-based drinks. Stevia-based drinks called Zevia have been recommended by my doctor because they have stevia in them, which is extracted from plants in tropical areas that has had a lot of studies done on it, and it doesn't seem to have adverse reactions like aspartame or sucralose or any of that garbage. So I do recommend stevia-based drinks. The problem is they're very hard to find because with the advent of, or the not advent, but popularity of keto diets, everybody's buying Zevia. So literally all my markets run out of it, and I go on Amazon trying to find it. My favorite flavors aren't there. So we need more companies other than just Zevia putting out stevia-based drinks. And as far as I can tell, they're fairly healthy. They're not as good as a regular soda, but it's as good as you can get without the negative dietary effects. Peter Freund says, at Julie Newhouse, cash out 100% of your IRA now, 100%. Boom, gotcha. Rob, you need a soda stream, says Fantana Randy. Yeah, I might get a soda stream, but I still need a healthy soda to put in it. John Bethea says, I've been using stevia for years. Good for you, John. And I've never had negative side effects on stevia, so I think I trust it more. Aspartame is a neurotoxin, says Long John Silver. Yeah, I think it's been linked to strokes, and it makes sense it's a neurotoxin. So thank you. If you have articles on that way, please email me. I need to read that stuff so I can never go back to drinking Dr. Peppers again. I don't see any additional questions in here, guys. I ranted for 45 minutes. So what I'm going to do, we're going to wrap it up in a minute. I'm going to go back through the case of why silver miners should skip COMEX. I'm going to go back through all the manipulation garbage, the technical indicators that is exposing them for the garbage traders that they are. And then we're going to wrap this up, guys. And we got new content for you tomorrow. In fact, this week, we got content today. We got it tomorrow. We got it Wednesday. And we even got something pre-recorded special for you on Thursday because we're awesome. And then we're taking Friday and Saturday off like we usually do. And then we're coming back Sunday. We got a lot of content for you this week. Thanksgiving Day special coming at you here on the Gold Silver Pros channel. All right. We're going to do this real quick. You guys ready? Let's get back to the share. 3 minutes or less, the fast version, summing up what the jerkos in this market are doing. The RSI and the MACD strength indicators and trade indicators indicated this was not a strong move up, and technically there's no reason to smash it, but that's exactly what they did to keep it below the 200-day moving average. We know that because we're looking at today's Monday, November 22nd's data. 101,000 contracts were dumped, most of it across 2 months, the primary big month being December, and the next big month coming up being March. And they dumped it at an average of 24.29 and 24.36. That's what brought it below the magic number 24.50 and kept it below the 50-day moving average. And I think they're going to continue to smash it down to the 50-day moving average. It's going to bring it to about 23.5. How do we know who it is? It's the bullion banks. Why? Because we look at the commitment to traders data from the CFTC, and they're the largest shorts and have been for over 10 years. And they keep getting fined. Barclays, Scotiabank, London Gold market fixing, which by the way is a market which has been renamed to try to hide the guilty, but it's still trading. JP Morgan, 60 million, Deutsche Bank, 60 million, HSBC. Who's hoarding all the silver? Let's go back and look at the spreadsheet. Who's hoarding the silver? 255 million ounces, almost 3-to-1 eligible to register. Eligible is private storage. It is not for trading, according to the CME, which runs the markets. Only 97 million, which is a low of about probably the last 2 years. It's under 100 million ounces. Remember that Silver Squeeze supposedly took 110 million ounces off the market through SLV in 3 days. They have less than that, less than 3 days of a silver squeeze. What happens when you have a true market panic? The stuff hits a fan in the economy. This 97 million ounces may not last a day. Who's holding most of it? Well, the assholes at JP Morgan hold a bunch of it. Didn't we see JP Morgan fined? What about the assholes at HSBC? They're holding 16 million ounces. That's why, ladies and gentlemen, if you're a miner, you're going to get whatever pricing you want for your silver in the next 3 to 4 years, and you can do private deals. And if you're a manufacturer, you better damn well go get it while you can, because the bullion banks are pulling it off. And lastly, if you're a retail trader, you better damn well get it while you can. And I don't want a bunch of garbage postings about how silver's not moving up and it's a loser investment. It's manipulated. We saw the data. It means buy now. Buy when it's cheap, because when this thing runs, it's going to make Bitcoin look like tiddlywinks, okay? Because it's going to be real, unlike all the washing transactions that the jerk-offs that control the Bitcoin market do to get you to buy in and lose all your money. This is different. Once silver runs, because of a physical shortage, because it's an actual physical thing, unlike Bitcoin, it's going to run and you can't stop it. And they're running out of ammo, and they've hoarded almost all the above ground. So they're ready to flip the switch and let it go long sooner rather than later. Could that be a year? Sure. But it doesn't matter. Okay. That gives you time to get in. That's the story. I'm sticking with it. This has been Going Live. Silver miners should skip COMEX and sell it directly to buyers. That was my 3-minute or less summary. Go back and watch the beginning if you want the whole thing. I laid it all out for you. It's blatantly obvious. I don't know what in the hell's to say. Buy when there's blood in the streets, says last living old cowboy. That's from Baron Rothschild, the king daddy of the elite families of them all. Crash the markets, buy when there's blood in the streets. That's what they do. That's what they're doing to silver. If you're smart, you'll do the same thing. All right, guys, this is going to wrap it up. I wanted to thank everybody for stopping by the program today. I have ranted now for 50 minutes. I feel a little better. I'm still pissed at the bullion banks, but I feel a little better. And I'm glad you guys could come join me in my rant. Again, Fontana Ranta has requested a PG version of this. If somebody would bleep it out and send it to him, I would appreciate it. So he can send it to his mama and he can get her trading silver, not trading silver, but buying silver. But thank you everybody for supporting us. Remember, we have Patreon if you want to support us further. We do monthly precious metals breakdowns. We do weekly news breakdowns. We do the mining stock. We do a lot of stuff for you guys. If you want to, if not, just stay tuned right here to the YouTube channel. We're going to bring you this stuff. We're going to bring you the best. Tuesday, Wednesday, and yes, Thanksgiving Day, we have pre-recorded material, only recorded in the last 3 days. It's all fresh, recorded for you on this channel. Stick with us through the holiday. I think you will be rewarded. We've got it here for you. GoldSilverPros.com, Gold Silver Pros on YouTube, Gold Silver Pros on Twitter, Gold Silver Pros everywhere. Thank you guys so much. I'm about to go play some soccer and have some fun. Till next time, Rob Keen's Gold Silver Pros, Cowboys Metal live stream. Don't let the asshole manipulators get you out of this market. Don't let them shake your tree. You double down and flip the middle finger to them. Don't let them manipulate you, because that price manipulation is going to come to an end when they run out of above ground stock. And this bad boy is going to run like you've never seen anything run in your life before. And I've armed you with the data. You know it. So stick with it. Don't give up. The day is coming. It's okay to get pissed off on days like this, but you internalize that and you let it make you strong and you don't back down. Don't take bullshit. All right. Till next time. See you guys.